Didn't I tell you in the thumbnail not to click on this crash video? But as you clicked, let's discuss the YouTube stock market crash mania. This is a behind the scenes YouTube studio snapshots telling me what are the videos that my audience, yes, you, watches. So YouTube tells me, Sven, these are the videos that your audience watches. Please make more similar videos in order to increase your views. And if you look a little bit at the titles, 80% of the watched videos are related to stock market crash, some kind of fear selling or something like that. And that's exactly what I want to discuss today, to give you a perspective on what YouTube serves you as in the thumbnails, what to choose as watching, and why do you spend, as YouTube tells me, most time and most clicks on stock market crash videos. If I look at my videos, if I make a stock market crash video, I immediately get 150,000 views depending on how much panic do I sell in that video. If I make other videos, I get between 20–30,000 views. If I really put effort into an educational video, if I share a new tool, new knowledge, really something really good, then YouTube tells me, Sven, fewer regular viewers are watching this video, because who are YouTube? You don't like it. You want entertainment, you want action, you want fear, you want greed, and therefore stock market crashes videos, as will likely this stock market crash video, do really well. But that's something important to discuss also, so that you know what kind of investment videos, stock market videos you get on YouTube. YouTube looks at how long you watch a video and how happy you are watching similar videos over time. So the core YouTube strategy is stock market crashes. But you must keep in mind that your previous behavior and subconscious, what you clicked, what you strive for, will determine what YouTube will serve you and what you will likely watch in the future. That's very important, because it might not lead to the most rational investment decision-making process and might not lead to the most rational data collection risk-reward investment decision process. So it might entertain you, but it will unlikely make you rich, which should be the point of all these YouTube investment videos. And if I look at stock market crash videos, I made stock market crash, and you see here 13 hours ago 126,000 views, in a day 42,000 views. So stock market crash, and I just listened a while, as much as I could force myself to listen to that. And my issues with these stock market videos is that it is really catering to what the public wants, which is short-term entertainment, thinking that it is value adding, but it actually isn't. And we'll discuss that in a second. But before discussing that, let me give you 100% correct stock market crash prediction. I can guarantee that the stock market will crash 50%. That's a guarantee. I can sign, I can put all my wealth, all my organs on that guarantee. The only little problem is nobody knows when it will happen. And if you have this stock market crash mindset, you're actually not focused on what really matters when it comes to investing. And what really matters is that you own businesses that will transcend the market and the economy. If you focus on investing on things that will do good no matter what, you have nothing to worry, therefore you have nothing to click on these stock market crash videos like you did now. If we just look at Berkshire Hathaway, the amazing Berkshire, for Buffett it's totally normal that his stock crashes 50%. I think top tick to bottom tick, every 12 years Berkshire crashes 40–50%. That's an absolute given for Warren Buffett, and this hasn't stopped him to compound the 20% per year. So we as investors, the best thing what we can do is to simply accept that crashes will come, and I'm sure that my market crash prediction will be 100% correct. I just didn't say when. And the message is, if you worry about stock market crashes, about the market, it means that there are some issues with your portfolio, because you have to work on the fundamentals of your portfolio, the financial goals, the path of getting to your financial goals, the right financial vehicles, because you need to have a whatever happens, I am okay strategy. This is the core of investing. Anything else will likely lead you to make the wrong decisions in time, because this is, let's say, an investing pyramid. This small pyramid should be even smaller, and that's the importance of market crashes and economies and macroeconomies and whatever when it comes to your investing. But 99% of time spent, financial content, etc., is on the market and on economics. However, what really is of importance is the quality of your businesses, the flexibility of your income and portfolio, and your financial goals that are aligned with your financial vehicles. And if you spend time on this, not on this, you will reach your financial goals. That's the core of investing and the message of this video. Because if we look at the distribution of returns from the stock market, in 1 year, stocks can go up 47% and can go down 39%. This is data from 1950 to 2020, so 70 years of data. This is our 1 year returns. But if we look at 20-year returns, then the average is 11%, the top is 17% per year over 20 years, and 6% the worst return of over 20 years. I firmly believe that this is something you cannot have an impact on, you cannot know this, you cannot predict this, but still 90% of people focus on stock market crash, but this is something you make the decision with, and this is something actually that you have the responsibility of reaching. Stock market crash next year, nobody knows, can happen, might not happen, who cares? This is about whether you are going to be an investor, whether you're going to structure your portfolio rightly, quality businesses, low risk, high reward. Then you can work on the other side. And when you see this 47, 49, you might not think that it is important, that the 17 and 6% are important, but that's actually crucial. But this is talking about 20 years. Nobody wants to talk about 20 years. But it's actually the thing that will make you millions in your life. Let's go to the investor government compound calculator. Let's say we start with 10,000 investment. Let's say that we have a monthly contribution of 500, invest over a life cycle of 40 years, estimated interest rate, let's say 10%, which is the average what stocks returned, and then interest rate variance range, let's put it at 6%. So low variance 4% yearly return, up 16% yearly return. If I calculate the returns, so investing, one with 16% per year can end up with 17.9 million from the initial, what was it, 10,000 investment. If you have 10%, you are at 3 million. If you are 4%, you are at 600,000. So the difference between the top line and the bottom line is 17.3 million on the same inputs. That's insane. But that's the power of investing, and it's up to you whether you want to focus on improving a few percentage points returns compounding over the long term, or you want to focus on the stock market crashing. Most investors focus on the stock market crashing, and that's why over the last 20 years average investors have returns of 2.5%, while the market did much better, and even better investors did much better. But this is entertaining, this is what drives content, clicks, fear, greed, whatever. This is boring all time. And if you made it to 10 minutes into this video, congratulate yourself, because you might hit this number over the long term. And it's so easy to get infatuated by the market. You see this, oh, if I sell here, buy here, I can save 40% of my portfolio. Sell here, buy here. But this also means, okay, now it's time to sell here, and then you miss most of the run-up on good stocks, on whatever. It's about your focus, whether you want to be focused on investing, owning businesses, getting those returns from businesses, or on something else. And unfortunately, most people are focused on something else, but I would tell you, crashes are a given. Stock market crashes will happen. That's nothing we can do about the market. What we can do is owning good businesses that if those crash, like Berkshire, we are happy buying more at lower prices. Because over time, and we are now in a very good period for stocks, but there will be very bad periods with zero returns for decades. What are you going to do if this happens? Are you ready for this? Real investing is always ready for this, where you invest in businesses, not the market, not the economy, not the interest rates, just pure business. And again, even if I make a stock market crash video, when I start talking about strategy, simply the retention rate of my videos is down to just 30%. So if you manage to stick around until this part of the video, you are really the minority, and I really congratulate you, because it's likely that you will hit that 17% returns over the long term if you focus on that. If you focus on stock market crashes, you already clicked away when I predicted with 100% correctly that the stock market will crash. But giving more on YouTube, this is a very interesting chart showing how investment flows indexed went by age. Look at the explosion of 18 to 25 investors in 2021. So that's a 3x explosion of flows by that age. Also, look at the explosion with the stimulus checks coming in of investors 4x, 5x that have annual incomes of 0 to 35,000. Rich people didn't change much when it comes to flows and investing. So this is really remarkable and interesting to watch, but we are here to learn about investments. Check, for example, my Alibaba video for an investment idea. Check my stock market research platform for more investing ideas. Mambo jumbo, stock market crash, forget about it. Thanks for watching, I'll see you in the next video.